In today's video, I'm simply going to go over how I personally learned to trade and how you can use a similar path that I used to actually become a profitable trader in 2023. We're going to go through how I originally got into trading, what did I start with, what worked, what didn't work, and how I developed a strategy that was making money every now and then to a strategy which is consistently profiting month after month in the Forex markets. You know, if you don't believe that I'm profitable, there's a link in the description to my WillssFX book. It's been public now since September, I'm pretty sure. And we've had 0 negative months in the markets. You know, we've had, I think, 82 or 85% win rate. Very, very nice. So this strategy that I actually use clearly works. And I don't usually promote my mentorship, but in the description is my mentorship, you know, Discord community. I've got all the live calls recorded and everything. Video course as well. So go check that out. If you want to know how I personally trade, and if not, it's not a big issue. You can follow the steps I actually talk about in this video and kind of trade on your own, which is kind of what I did. You know, I learned on my own. Well, when I first started trading, there was no one really my age when you're 16 years old to talk to. There's not really someone you can be like, oh, I'm learning to trade, can you help me? And then someone kind of helps you learn to trade. Like nowadays, there's like communities, there's Discord groups, there's YouTubers and everything. And obviously back then, no one really wants to help a 16-year-old kid. But I guess now there's so many young people getting into the markets. You can find people to talk to, you can find people to trade with, to grow with, and to actually hopefully be consistently profitable with. Originally, I got into trading from, you know, someone that I knew from school, and I was 16. And they were in sixth form, I'm pretty sure, so a little bit older. When I started actually Googling about Forex trading, you obviously see the Lambos, the money, the watches, the cars, everything like that. And I knew that this wasn't right. So I started Googling, you know, technical analysis videos. You know, I went through everything. I went through support and resistance, indicators. I was the type of person that would be there on my phone looking for iPhone strategies because I didn't have the best laptop. It was a smallish screen. And I was trying to trade from my phone on MT4 whilst I was at college, and it was a disaster pretty much. Once I started focusing properly, you know, on actually technical analysis on YouTube, this is when I kind of started to put a lot more effort in. When I realized that if I put effort into technical analysis, rather than just trying to get rich quick and find an easy strategy, then I can, you know, potentially make a lot of money from trading. So what I did was I took the different strategies from YouTube and I kind of made it my own. So I'd watch a YouTube video, let's say on one particular type of trading, and then I'd backtest that particular type of trading. Obviously, each strategy can work. Let's say you just trade with indicators, that can work. If you just trade SMC, that can work. It is obviously individual. So I could probably not make money from SMC, but let's say I can make money from an indicator strategy. It works like that. So certain strategies will suit certain people more than others. And that's kind of what you got to find from your own testing. What I did was I kind of tested these different strategies, which I'd actually found just through backtesting. So I went on TradingView, I created spreadsheets, and I started backtesting. I properly started trading, like actually trading in 2020, you know, started 2020. I think it was around February or March when I actually made my first bit of profit on my first week on a live account, which was pretty fun. But that's for another video. So when you actually backtest, you start to see results on certain strategies and you start to filter out your trading. So at this point, I didn't really have a set trading plan. That's kind of what I added later. I pretty much didn't have the right education to know that if I have set criteria, then I will be able to trade a lot better, but I didn't know that. So what I did was I was like, okay, so if I enter when this breaks here and this retests here, then I can get a nice trade. Then I was also trying to trade, okay, so if this candle closes at this, it's a morning star or whatever. So I was trading like a mix of candlestick patterns and support and resistance. I tried to trade, you know, at Wyckoff and all that stuff. But I got rid of that because I was like, this is pretty much pointless. And I kind of traded a lot of different strategies in one, which is very, very bad. So if you are learning how to trade and are kind of mixing strategies, pick one and master that one. If you're a support resistance trader, you can make money from support and resistance if you master it. Whereas if you're just dabbling in one strategy here, next week you're looking at another strategy, you can kind of get very, very confused because you'll start seeing things from one strategy when it's not in your plan, and then you just enter anyway because you've seen something on YouTube where someone said, if it does this, then you're going to sell. And it's it's not really the best thing for your trading. Whereas if you're backtesting and improving one strategy only, then that's when you can start to see a lot of success in your trading. So what I ended up doing was I started trading like my own sort of concepts of support and resistance, or like supply and demand. And I was trading this and it was starting to perform really, really well. Obviously there were extra bits which I was adding in to get my entries, because just support and resistance, it's not really the best. Whereas if you add, you know, entry confluences, directional bias and everything, it can help a lot. So when I actually had a good idea of when to not enter trades, when to actually, you know, put the money at risk in the markets, obviously this was only backtesting at the time, but this is when I moved on to trading with a demo account. And a lot of beginners make the mistake where they put their trades on a demo account with like 100 grand in the account. So I'll simply set up a demo and be like, oh, let me put 100k in the account. And then if they make 10%, they're like, oh, I made $10,000. If I start trading with a live account next week, look how much I can make. Well, if you start trading with a live account, you're not going to have 100 grand just to put into an account to trade in your first live account, are you? So start a demo account with a realistic amount of money in there. Let's say you're going to be trading with $1,000 or £1,000. Put £1,000 in that demo account. So when you open it, put £1,000, you know, if you're able to choose that certain amount. The benefit of actually trading on a demo rather than backtesting is you're actually seeing it real time. So let's say you do the analysis on TradingView and it's just a risk reward tool, you know, it's not really great because a few clicks of the buttons and you can see what's going to happen. Whereas if it's live in the markets, prices at your entry point now, would you enter? If it's on a demo, you actually have to press enter with your stop loss and take profit. You actually have to pull the trigger. Obviously, there are a lot of downsides to demo accounts, such as you have no emotions. And obviously, if you have no emotions, you have, let's say you're in profit and it pulls back a little bit, because it's not real money, you haven't technically just lost that profit, which is, you know, pulled back. But if it's your real money, you're like, oh, I just lost £50 worth of profit when it pulled back. Let me just close and secure it. A lot of people like that. It's not ideal. So demo accounts are good for just getting used to the strategy, maybe getting used to the trading platform if you're a new trader, getting used to your MT4, calculating your lot sizes, because this is obviously very important for a lot of traders. Myself personally now, with the accounts I trade, I've kind of memorized the lot sizes because I only trade GU and I only have 10 pip stop losses. So I know that on a 200k account, that's 20 lots. Simple as that. So I don't really have to use the lot size calculator now. Whereas if you have an account that's not like a flat balance and you're using different stop loss sizes, then you obviously need to use maybe an app like Stinu. I think MyFXBook have a free risk management calculator as well. A lot of free options out there. So after the demo account, and I was starting to make, you know, consistent profit for a few months actually. I actually started on a live account. My first live account was $700. Obviously you don't have to put that much in. Obviously you could put more in. It's just what you're comfortable risking, but I don't recommend putting a lot in. I recommend enough so you can actually risk manage. If you put £50 in, you can't use correct risk management with £50 in the account. You can't lose 50p per trade. It's very hard to do so. Even with like 0.01 lot sizes, that's only 5 pips. Stop loss has to be 5 pips or less, or you're losing more than 1%. So I said at 250, 500, it's kind of a good starting point if you can afford to do so, and if you can afford to risk that amount of money. If your life's not going to change if you lose that money, then I guess it's okay to risk. So when I was trading on this live account, I was trading normally, but obviously you get in that stage where you just try and flip it, you try and get rich quick, and that's what I did. You know, I flipped it from 700, it actually went down to 450. This was when I was like, oh, I'm down to 450. I've just lost 250 profit. Oh, what am I going to do? So I just flipped it to 2K. I withdrew 1,000 and then I blew it the next day. Simple as that. I just blew the account. You don't want to do that. You want to stick to your plan. So before you go live, have a trading plan. Know your set criteria. So let's say now I'm looking at the charts. I open TradingView. I only use a 15-minute time frame. That's one of my rules in my trading plan. Only the 15 minutes. Only GBP USD in London session. So I know exactly what to trade on what time frame. Simple as that. Then I look at the analysis. Do we have a break of structure? If we don't have a break of structure, I'm not trading. Simple as that. Then you have more things. You have your entry confluences. You have different things that you need to see to get into the trade, to put where to put your stop loss, where to put your take profit. If you have all of these figured out already, you've got the test results, you've done a lot of back testing, you've done a lot of forward testing. This is when you can start to, you know, implement more money into the account. Let's say you're doing really well with an account of around 250, 500. if you can afford to do so, maybe put another 500 in, another £1,000 in, and kind of keep building it and building it up. Or even if you feel like you're ready and you're making enough profit, 10% in 30 days, is that doable for your strategy? Have you been able to do that consistently? If you have, then perfect. That's when you can start to move on to prop firms. This is a good way of actually building capital, because I actually did this at the start too. If you do a £450 investment and you pass, you then get access to $100,000 to trade with. Very, very nice. And then once you get a payout, you get your refund anyway. And what you're going to want to do is use the payout from the prop firms to fund your personal account. If you're getting $10,000 a month from a prop firm, make sure you put money into a personal account. If you don't, and then you blow that prop firm account, you have nothing to trade with. You're left with zero in your trading account. Simple as that. Whereas if you're putting it into investments, putting it into, making sure you diversify your money, you'll be set. Even if you blow the account, it doesn't matter. You have investments, you have other trading accounts. Obviously it's not ideal, but you still have backups and systems in place where you can still make profit and you can still actually actively trade. And then once you've done this, you've got a funded account, you're making consistent profit, your personal account's making money also. This is when you just want to refine and scale. So by refining, I mean, even to this day, I'm still back testing every week, just trying to improve. If your win rate's 70%, let's say, that's very, very good, but it's not 100%. Obviously, no one really has a 100% win rate, but it can always improve. Even if your win rate goes up by 2%, 5%, your profit's going to increase also. Maybe you can make it so you have less drawdown, you have smaller stop losses, which means obviously you have higher risk to reward. All these things are possible just from refining your strategy. Going into backtesting, which hours of the day should you trade? Which market phases should you trade? Which candles do you not trade? Everything like this you can kind of refine and go in and realize, okay, there's ways I can improve my trading. A lot of my trades have 80% drawdown, for example. Maybe your entries are wrong, so then you go and try and improve your entries. Are you entering too early? Are you entering too late? All these things which you can change. Using all of this combined with your live trading, with your backtesting, this whole stage of trading, you should be journaling. Even if you're not taking a trade, what did you see in the markets? What made you not trade? Was there a certain candle? Was there no breaker structure? Write this down. So then you can look back on your good days, your good weeks, your good months, when you're in like a rough patch, and realize, am I trading exactly the same? Was I trading when there was no breaker structure? Was I breaking certain rules? And you can kind of learn from it. You can also see what to eliminate from your trading. Let's say you've had a losing month, you then have a few winning months, and you do a bit of reflection. What was I doing on those losing months? Was I trading exactly the same? Was I trading, with a lot of stress from outside of trading? Let's say you've had to fix your car, you've had to pay a lot of money out. Is this affecting your trading results? Maybe just don't trade when you're experiencing stress outside of, the trading environment. So if you guys did enjoy this video and it helped you in any way, be sure to subscribe and like the video, and I'll catch you guys in the next.